I think this year the market's priced as pretty much on hold. The Fed's told you patience. I think a few Fed presidents have come out and said they still think they might get one. But most people are focusing on this inflation data, and I think that's the real story. For me, it's been the story all last year. We got freaked out on inflation. We shouldn't have. We got some miscommunications that got fixed in January. And now we're still sitting here with an inflation rate that's still below 2% after 2 years of being below most estimates of full employment. Phillips curve's dead. There's no inflation. Why are we raising rates?
Right, because that curve is the idea that, hey, as the labor market gets tighter, pressure on interest rates goes higher. Bill, the wage pressures, all of that goes up. Why are we getting growth but no inflation?
Well, it reminds me about 5 or 6, 7 years ago, you heard a lot of negative nabobs say things like, oh, we've printed so much money, we have to have inflation. Well, I thought about it like a Monopoly game. Let's say you had a Monopoly game, you used the parts so much, you bought a new one, but the cash hadn't been used much, so you just doubled the amount of money in the bank. If you double the amount of money in the bank, it doesn't cause inflation unless the money gets used. So what's happened here, and we've had a lot of discussions, you and I have over the last couple of years, we have this massive number of people, millennials, that are 95 million of them, that are going to move through the system, but they've been very slow to aggregate. Things are maybe running 2 or 3 years behind. You heard Warren Buffett on your guys' show earlier say, gee, the home building, I'm really surprised, he said. I'm really surprised it hasn't picked up more. But it will coalesce at some point in time. The money has already been created. So at some point in time, when their borrowing power coalesces, they will drive interest rates. And here's a prediction, my outlandish prediction of the day. 10 years from now, people will look back at what the Fed was doing now and say, why didn't they do more to stop the inflation that we have now?
I understand, but Dave, we've been thinking that for a long, long time. It makes sense. Everything Bill's saying makes complete intuitive sense, but we're 10 years on now. And everyone who says, just looking at financial markets, not making an ideological argument, says, look, it inverted, some of the short-term corporate borrowing rates. Yep. If you look at the difference between the 10-year and the inflation rate, those metrics suggest that the Fed tightened too much. As little as they've done, but they did hike 4 times last year. Do you think Bill's right?
I tend to disagree. I don't think that inflation story is a viable story. I think we have a lot of disinflationary risks: technology, demographics, corporate tax reform is disinflationary, deregulation.
Wait, so just to be clear, you think demographics are going to be disinflationary?
Massively disinflationary.
You think, Bill, that they're going to be inflationary?
Hugely inflationary, because when everybody wants the same thing at the same time, the price goes up. And then secondarily, the baby boomers were a very large group of people working, and as they retire in mass the next 10 years, and they will retire in mass, we're going to have labor shortages. So the combination, and I don't mean just labor shortages trying to find somebody to drive an Amazon van. I'm talking about labor shortages.
Knowledge economy.
Knowledge economy labor shortages. And that will drive the wages up, and it will eat into the profit margins of these amazingly profitable corporations.